What if I told you that the richest people in crypto, the ones who've built generational wealth from this volatile asset class, didn't get there by perfectly timing the market? They didn't have a crystal ball to buy the absolute bottom and sell the absolute top. In fact, most of them will tell you that trying to do so is a recipe for disaster. It's a game of chance that even the most seasoned traders struggle to win consistently. So, what's their secret? It's a strategy so simple, it almost feels like cheating. They got rich by never stopping buying, that's right. They committed to a plan and executed it with relentless consistency through the euphoric highs and the terrifying lows. This disciplined approach has a name, and it's the foundation of countless investment success stories. There's a name for this: dollar cost averaging, or DCA. At its core, DCA is the practice of investing a fixed amount of money into a particular asset at regular intervals, regardless of the price. Imagine investing $100 into Bitcoin every single Friday. When the price is high, your $100 buys you a smaller piece of Bitcoin, but when the price drops, that same $100 buys you significantly more. Over time, this strategy averages out your purchase price, smoothing out the bumps from wild market volatility, and removing the emotional guesswork of trying to find the perfect time to buy. You're not trying to be a hero, you're just consistently accumulating. Now, this classic strategy has been a game changer for decades, but we're in a new era. What happens when you take this time-tested principle and supercharge it with modern technology? What if you could make your DCA strategy smarter, more responsive, and more optimized for the unique conditions of the crypto market? That's where artificial intelligence comes in. When you combine dollar cost averaging with AI to help analyze market sentiment and volatility, it becomes one of the most powerful, accessible, and automated wealth-building tools available to a regular person today. In this video, we're going to break down exactly how to build this system for yourself. Let me show you the math, the strategy, and the exact AI setup, so you can run this on autopilot starting this week. Let's talk about the math that truly matters, the simple arithmetic that can build wealth over time without requiring you to be a financial wizard or a market psychic. It's a strategy called dollar cost averaging, or DCA. The concept is straightforward. You invest a fixed amount of money at regular intervals, regardless of what the market is doing. Think of it as putting your investment strategy on autopilot, removing emotion from the equation. Instead of trying to time the market, a notoriously difficult, if not impossible task, you commit to consistency. This disciplined approach is your single greatest weapon against volatility. Here's how it works its magic. When the price of an asset like Bitcoin is high, your fixed investment buys you fewer units. When the price drops, that same fixed investment buys you significantly more units. Over time, this process smooths out your purchase price, giving you a lower average cost than if you had tried to guess the market tops and bottoms. You're effectively turning the market's volatility, its wild swings up and down, from an enemy into an ally. This is what experts call volatility harvesting. You're systematically buying more when prices are cheap and less when they're expensive. Now, let's look at a real-world example. This isn't a hypothetical scenario, it's historical fact. If you had invested just $100 in Bitcoin every single month for the last 5 years, your total investment of $6,000 would be worth over $21,000 today. That's a return of over 250%. And this result isn't cherry-picked from a single perfect time frame. This period included dramatic bull markets where prices soared to all-time highs, but it also included brutal, gut-wrenching bear markets where prices crashed by over 70%. The DCA strategy forced you to keep buying through all of it. You bought at $60,000, and you bought at $16,000. The same principle holds true for other major crypto assets like Ethereum. A consistent DCA strategy would have weathered the storms and emerged significantly profitable. This demonstrates the core power of the approach. It removes the fear and greed that cause most investors to buy high and sell low. Instead, you just keep buying. The key word, the absolute foundation of this entire strategy, is consistent. This means you don't stop when the market is euphoric and everyone is talking about getting rich. And more importantly, you don't stop when it crashes. You don't pause your contributions when the headlines are screaming about the end of crypto and your portfolio is deep in the red. In fact, that's precisely when the strategy is most powerful. Those purchases made during periods of extreme fear, when prices are at their lowest, are the ones that contribute most significantly to lowering your average cost and maximizing your future returns. So let me be perfectly clear, you especially don't stop when it crashes. How AI improves DCA. The smart version. We've established that dollar cost averaging is a powerful, time-tested strategy. Its beauty lies in its simplicity. You invest a fixed amount of money at regular intervals, regardless of the asset's price. This automates your investment discipline and removes emotion from the equation. Basic DCA is your reliable, steady foundation. But what if we could make it just a little bit smarter? What if we could layer a level of intelligence on top of this discipline, without sacrificing the core principle of consistency? This is where artificial intelligence comes in, transforming our simple DCA into a dynamic, responsive strategy. We're not trying to time the market perfectly. That's a fool's errand. Instead, we're aiming to optimize our entries, systematically buying a little more when the odds are in our favor, and a little less when they aren't. Think of it as upgrading from a simple automatic transmission to a sophisticated adaptive one that adjusts to the road conditions. The core idea behind AI-enhanced DCA is to adjust your buying amount slightly based on clear, data-driven market conditions. Instead of buying $100 every single week no matter what, your AI-assisted strategy might have you buy $120 one week and $80 another. The most important input for this is market sentiment, which we can measure using the Crypto Fear and Greed Index. This index, which ranges from 0 to 100, aggregates multiple data points, like volatility, market momentum, social media sentiment, and more, to produce a single digestible number that represents the emotional state of the market. A low number signifies fear, suggesting investors are overly worried, which often corresponds with lower prices and a potential buying opportunity. A high number indicates greed, meaning the market is becoming euphoric, which can lead to overvalued conditions. Our rule is simple and follows the timeless wisdom of legendary investors. Be fearful when others are greedy, and greedy when others are fearful. So, when the Fear and Greed Index is in a state of extreme fear, let's say below 25, it's a signal that the market is panicking. Prices are likely depressed, and the average investor is selling. This is precisely when our smart DCA strategy leans in. Instead of buying our standard amount, we buy a bit more. We're not doubling down or going all in. We're making a calculated, predefined adjustment. For example, we might decide to increase our purchase by 25%. This allows us to accumulate more of the asset at a lower average price, capitalizing on the widespread pessimism. Conversely, when the index shows extreme greed, let's say a reading above 75, the market is euphoric, everyone is piling in, prices are soaring, and the fear of missing out is palpable. This is a moment for caution, not exuberance. Our AI-enhanced strategy recognizes this as a period of heightened risk. Instead of getting swept up in the hype, we pull back slightly. We still make our scheduled purchase. Consistency is key, but we reduce the amount, perhaps by that same 25%. We're still in the game, but we're buying less of the asset at what could be a temporary peak. This disciplined pullback prevents us from over-investing at inflated prices and preserves capital for when fear inevitably returns to the market. Over time, these small, intelligent adjustments can have a significant impact on your portfolio's performance. You're still buying consistently, which is the heart of DCA, but you're strategically leaning into fear and backing off from greed. This method, often called volatility harvesting, allows you to acquire more units of the asset for the same total investment compared to a basic DCA plan. You're systematically buying more when the price is low and less when the price is high. It's a subtle but powerful optimization that aligns your actions with a rational counter-cyclical investment philosophy, all while using simple, accessible data. So how do you put this into practice without spending hours analyzing data? You can use a large language model like ChatGPT as your personal data analyst. You can create a template prompt that you use for every scheduled investment. For example, you could ask, I am following an AI-enhanced DCA strategy for Bitcoin. My standard weekly investment is $100. My rules are, if the Fear and Greed Index is below 25, I increase my investment by 25%. If it's above 75, I decrease it by 25%. Otherwise, I invest the standard amount. The Fear and Greed Index is currently at X. Bitcoin is up-down percent this month. Based on my rules, what should my investment amount be this week? This prompt gives the AI your clear, unchangeable rules and asks it to perform a simple calculation, removing any guesswork or emotion on your part. It becomes a simple, repeatable process. Check the index, run the prompt, and execute the trade. Setting it up in 5 minutes, Coinbase recurring buy. Choose your asset, amount, and frequency. Add one rule. If your AI alert from coinstats flags extreme fear in the market, temporarily double your contribution for that period. That's it. You now have a smarter than average investment strategy running automatically. The ChatGPT DCA prompt, the coinstats alert setup guide, and the Coinbase recurring buy link are all in the description. This is genuinely one of the most impactful financial decisions you can make. Subscribe, and tell me, how much are you DCAing per month right now?